Stop scrolling because what I am about to tell you just erased over $1 trillion from global markets. Not in crypto, not in some smaller sector, from the world's biggest stock markets. If you invest, if you trade, or even if you plan to invest someday, this video can save you years of mistakes. So don't skip. Stay till the end because panic destroys money, clarity builds it. If market affect you in any way, hit like button right now so this video reaches more investors. What just happened in global markets? Over the last few sessions, global markets didn't just fall. They synchronized a sell-off. In the US, Dow Jones Industrial Average, S&P 500, Nasdaq Composites all closed sharply lower for the third consecutive time. This is classic risk of behavior. Money is not being invested, money is being pulled back. And this fear didn't stay in America. When fear travels globally, it's never random. Comment watching if you are still here. This is where it gets rich, serious. Asia and Europe following the domino effect. Asian markets opened weak, European market followed. Why? Because global capital think in one language, risk versus safety. As reported by Reuters, investors are worried about earnings slowdown, tightening financial conditions, and weakening economic signals. When US markets sneeze, the rest of the world catches a cold. It's not a local panic, this is a global repositioning. If you invest outside just one country, share this video. The biggest hit tech and AI stocks. Now listen carefully. The biggest damage happened here. Tech and AI linked stocks more than $1 trillion in market. Value gone. Why? Because expectations were too perfect. AI was priced as unlimited growth, zero competition, infinite margins. Really hit. As highlighted by Gulf News, investors are suddenly asking, are these valuations justified? Is AI growth too crowded? And when questions start replacing confidence, selling begins. Markets don't crash on bad news, they crash when good news stop being exciting. If you own tech stocks, don't skip the next part. Australia and global ripple effect. Even Australia couldn't escape as reported by news. Billions were wiped off Australia equities across sectors. Why does this matter? Because Australia reflects commodities, global demand, China exposure. When Australia falls with US and Europe, it confirms global weakness, not a one market issue. When every continuous bleeds together, it's a warning. Save this video, you will revisit it later. So, what is the market really afraid of? Let's decode the fear. This is not just about one bad earnings report, one interest rate decision. This is about uncertainty stacking up. Earning growth slowly, valuations already stretched, AI hype cooling, economic data sending mixed signals. Markets hate confusion more than bad news. Confused markets don't reward hype, they reward patience. If this is making sense, drop a in comment. Why retail investors panic first? Here is the uncomfortable truth. When volatility rises, institutions rebalance, smart money waits, retail investors panic sell. Most people exit after damage is done. They sell because red screens scare them, headlines amplify fear, social media screams crash. The market transfer money from the impatience to the prepared. If you have ever panic sold, you need the next part. What smart investors do in sell-off? Smart investors don't ask, should I exit everything? They ask, where is the risk overpriced? Where is fear exaggerated? During sales off, they raise selective cash, reduce weak positions, watch leaders, not losers. They observe, not react. Volatility is not danger. Volatility is not danger. Unpreparedness is. Like this video if you want strategy, not noise. What happens next? Three possible scenarios. Short-term bounce. Sideways consolidation with high volatility. Deeper correction if earning disappointed further. But here is the key. This is not the end of market. This is a reset of expectations. Every major rally in history was born after fear peaked. Markets fall to scare you out, then rise without you. Stay till the end. This is your age. Don't let fear steal your further. Remember this. Market don't reward emotions. Market reward discipline, patience and clarity. If you understand cycles, control reactions, focus on long-term structure, then sell-offs become opportunities, not nightmares. Subscribe if you want calm thinking about chaotic markets because the next big move will reward those who stayed prepared, not scared.